Yes, 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 man. Hey, what is going on? Gerald Peters, welcome back to the channel here at my house in New Orleans. You guys know, um, hey, whatever you think about comes about. Whatever you focus on grows. I believe that anybody, regardless of age, race, sex, or even your current financial situation, anybody can become financially free in the next 5 to 7 years. And that's what I do, man. That's what I teach. That's what I do with my free ebook. You don't have to die broke. It's completely free of charge. Go hit it. Be happy to help you, man. I believe in circulating positivity. I believe in circulating good karma. I believe that what you give away, you always get to keep, man. So all right, so it's been a while since we logged into E-Trade, and I just want to show you, this is my E-Trade. Before you make fun of my nails, we're doing some parties here in New Orleans. Seems to bother a lot of people. Oh my God, he painted his nails. Anyway, welcome, Gerald. Balance on these accounts is $750,112. I have a couple other accounts, some crypto accounts, my wife's retirement account. We got HSA, a couple other accounts. So you're going to see in here, okay, traditional IRA. What else we got? SEP IRA, that's 451. But here's what we want to look at. Margin trading. Current balance, $114,256. Okay? Now, you're going to notice my available withdrawal is crazy, crazy low. Crazy low. And my margin person power is crazy low. These should be about 5 times more than they are. I've been running a little hot and a little heavy because we are in an uptrend. One of the great advantages to learning how to read charts and learning some trading skills for all you guys in the second income stream. You're thinking, well, I don't have to look at charts. I don't have to trade. But if you learn the skill set that goes with trading, the skill set that goes with reading charts, you're going to get a much better return on your second income, your SIST account, because you're going to be buying on lows, you know. And you might even be trimming on some highs, you know, I don't know. That'll be up to you. I don't do a lot of trimming in this second income stream. But I'm going to give you an example today of where I would trim. It's loud. Take Google. Google is trading at near fair value. So if you go look at the Yield Max fund and if you go look at Google stock, time to trim. So if the underlying asset, if the underlying stock of the Yield Max ETF is trading at fair value or overvalue, I'd be fine with trimming it, okay? And I would roll that, what I call rolling profits forward. I would roll that to other positions. Okay, so we looked at my... All right, so here we are again. Let's hit the button. It's fixing to run. It's going to pull up a portfolio. What was today's gains? Available, today's gains, $1,261. All right, now I have it set up right now. I have a couple different filters I run. You see right here, view, test. So I'm testing some different ones. And all it shows is the percentage of the portfolio, the dividend, how much you get paid on the dividend, the quality of shares, and the dividend yield, okay? And the dividend yield. So you see it right there? 17, 17, 23, 52. You see these yields? So that's what we're looking at, is on these yields. I'm on the phone, bro. I'm on the phone. Doing all right though. Sorry, somebody wanted a dividend yield. Look at this one. Dividend yield, 101%, 12%, 11%, 22%, 108%. Now, when you're buying a dividend yield of 108% and you're only putting 50% of the money down, it's kind of like getting a 200% dividend yield. Hello. Right? And so up here, if you're going to look at the account, percentage of portfolio, 42%, 21%, 18, 18, 16, 19. So the top 10 positions are pretty much all tier ones, and it accounts for pretty much most of the portfolio. So if we get into the yield max, the tier threes, notice the size difference. You see these sizes? Look at that. 1800, 1700, 1400. See this? And as we get closer to the top 10, these numbers get bigger. You know? USA, RDT, WGT, YMAX. YMAX. Right? So you can see the position sizes. So what am I showing you there? What am I saying? I'm saying the tier 3s, the yield maxes, those 100 percenters. Those are 50% margin maintenance. Okay? 30 cents buys $1 of CLM, CRF, BCAT, ECC, CIFF, YYY, GOF, all of these quality closed-end funds, these REITs, these business development companies. Right? So we want to put most of our money in there. Okay? So in the worst case scenario, these are going to survive, even if these others get wiped out. These are going to survive. You know, you got to believe that. You got to believe in the U.S. economy. You got to believe in the market. You got to have faith. Can't be a little bitch. So we got to be past that. If you're not past that, don't play this leverage game, okay? Don't play this leverage game. Now, in theory, earning the return that I'm getting, my $114,000 should be a little over $600,000 in 5 years if I don't touch any of the money. But one of the things I was going to talk to you about is I've been experimenting, well, I needed to, of living on my SIS money for about half my income. Because the reason I started the SIS program was because I was going to be selling houses. So we're going to put 15 houses for sale here in the state of Texas. You know, I was going to keep the one in Louisiana, keep the one in Florida, but sell all the rental properties in Texas. And so I was going to lose about $14,000, $15,000 a month in gross, gross revenues coming in. And then, you know, we got taxes, we got insurance, we got mortgage and all that shit, right? So what you're left with is cash flow. And so I needed to replace cash flow. But not only that, I needed to replace some of the lost benefits that you get with real estate that you don't, that you can't get with stocks. You know, when a house appreciates, that's just tax-free if you don't sell it. You know, same with a stock. If it appreciates but you don't sell it, it's tax-free. That's one reason I don't do a lot of selling inside of the SIS account, because we're already collecting mad income. You know, if anything, I'd rather do a little tax harvesting and maybe write off some gains against some dividends. You have to make that call, and you might do a little research on that. You know, look down this corridor. Pretty cool, huh? Here's Bourbon Street over here. All the girls over here. So we're gonna head up closer to Bourbon Street, man. But anyway, let me pull back up this each account. All right, here we go. So net account 114,256. All right. So what we're gonna do here. All right, so here we are back looking at the account. We said it was $114,256.53. We said our available withdrawals way too low. We're going to be building that up over the next few weeks. But check this out. I want to hit estimated income. It's going to show you for the next year first. $82,092.32. That's over the next year. That is about $10,000 to $15,000 more than the average American earns. Okay, so we're making more than the average household on dividends right here, and we're paying a much lower cost because you're only going to pay 10 to maybe 20% of 10, maybe 20% of for taxes. Dividend taxes are pretty low. They're long-term held taxes. Pretty low tax rate. Now let's check it out. monthly. One month, $7,369. What's up with that? Okay. All right, so what about the next 2 weeks? 2,787. What's the next 1 week? The next 1 week, 1,760 in dividends. That's not bad. Everybody looks at you weird when you're recording out here. I don't know why, because there's cameras everywhere, there's people taking pictures everywhere. So I hope you see what we saw there. If you want, let's look at some of the positions here. I'll show you in my top 10. If you're in the second income stream, I posted them in our live chat. We have a whole community dedicated to the second income stream. If anybody needs a second income stream, holy shit, it is you. You need more money, my friend. More fucking money. It's a nice Beamer. So this is the historic Bourbon Street up here. New Orleans is one of those places when people come here, they lose their mind, they lose all respect, they lose their fact that these are people's houses. They go crazy. They're out here getting drunk, falling down. It's pretty crazy. I mean, I guess New Orleans has been known for that, but people come to Bourbon Street and do some dumb shit. After about the age of, I don't know, 25 or 30, you should know how not to drink yourself into oblivion, okay? It's fucking retarded. It is really stupid. Especially out here, you could easily be a victim. It means you have no self-control, man. Discipline, self-control, man. Don't let yourself get all fucked up like that.
Give you cards, like, give all the money, give you cards like you want. Do we get as long as I pay?
All right, now check this out. So here we're going to look at top 10 positions. See them right here? CRF is 42% of the portfolio. So of the 114,000, 42% of that is in CRF, CLM, and then we got ECC, QQY, and Uber. So a lot of the money is in the top 5, top 10 positions, you know? And I'm taking the money from those and spreading it out as money comes in, right? So you can see the positions. Tier 1, CLM, ECC, Tier 1, QQQY, Tier 2, Uber's an anchor stock. We can talk about that later. IWMY, Tier 2, GOF, Tier 1, YMAX, Tier 2, WDTE, Tier 2, RDTE, Tier 2. Now, RDTE, you need to look at it, only has a 35% margin maintenance at E-Trade, as does QQQY. I would take advantage of that, even as prices go higher. YMAX, gut, that's some utility stock. ULTY, I'm up to 1,435 shares. Send out an email on that. ASGI, Tesla.
Man, thanks for taking that little walk through the French Quarter with me. Let me know if you like these videos when I'm walking, talking about the second income stream. It can get a little boring just doing the whiteboards. If you come into the second income stream and get on our Substack letter, each week we produce content to keep you motivated, inspired, teach you about the different types of funds, from an MLP to a REIT to a closed-end fund to an ETF. What's the difference? What are the possible tax consequences? What can we do? Stay alert, stay vigilant. Don't be scared. There's no reason to ever fear the market. Markets go down, no big deal. It is always an opportunity. Hey, do me a favor. Click that link, man. Subscribe, share the video. Leave me an emoji, man. I don't know, an eggplant and a donut or something. Do something. Let me know. Hey, and if there's anything I can do for you, all you got to do is reach out, man. Hit me up. You can DM me, text me, call me. You can knock on my front door. Whatever you need to do. And if you don't have my free ebook, you don't have to die broke, Man, get it. Let's get on the same team. And go check out my podcast over on Spotify, The Science of Getting Rich. God bless.
Wow, time goes so fast. Big shout out and thank you to all the MFG, the Money Flow gang, for everybody that makes it to into these videos. Everybody encourages me to keep doing them when times get tough. I appreciate you. And hey, if I can be there for you when times get tough, you let me know. God bless.